Let's start with the latest data where you are in the United States. We've had some interesting numbers today, both consumer confidence and PMI numbers, but both of those bits of data have disappointed the markets.
Yes, and the dollar was trading up this morning. It gave back some of those gains, as you mentioned. PMI numbers that came out softer than expected. A reminder to some of the newer listeners, remember that PMI numbers, a number above a reading of 50 is considered an expansion of the manufacturing or services sector, depending on the number. Today we got manufacturing PMIs. The number came out at 47.8. That's obviously lower than 50, so it was contraction in the manufacturing section. This was compared to forecast. So analysts kind of were expecting 49.5. We got 47.8. That kicked back the dollar a little bit, but then, as you mentioned, we got more than just that. We also had the University of Michigan's consumer sentiment number. I really like this figure. I do find it to be useful. It's kind of a forward-looking. If you asked a bunch of people, hey, how is your spending looking for the upcoming year? How are you feeling? Are you traveling? All this sort of stuff. If you asked them a bunch of questions, it is sort of a forward-looking look at the consumer. So consumer sentiment this morning was also a little bit weak. We saw a index number of 79.6 as the forecast. What actually came out was 76.9. So a miss on both of those key red folders here this morning. Dollar was trading higher, gave back some of its gains, and at the time of recording, it's actually now red on the day. But kind of an interesting start to Friday. I do want to mention this was a relatively quiet week, but we have a huge week coming next week. I'm sure we'll talk about that in a moment, Johnny. But what else did you see? You saw oil making big moves.
Yes, that's right.
Yeah.
Interesting to see oil up somewhere between 2 and 3%. And I think this is largely down to this OPEC Plus meeting that we're going to see in the next few days, and possibly some geopolitical stuff going on in the Middle East as well. Difficult to tell.
There's so much to unpack here because when we first jumped on and we were talking a little bit about what we were going to discuss on the podcast, we were both at first like, oh, wait, so U.S. economic reads were a little soft, and yet oil's up, at one point today, nearing 3% at the time of recording. What's crazy about that is, cooling economic data in traditional thought would actually hurt the demand outlook for oil. But as you mentioned, there's some other key factors here. And in fact, they actually kind of lie more on the supply concern areas. Geopolitical stuff, right? Obviously, the tragic stuff that's been going on in the Middle East causes concern about the supply. If there's boycotts and sanctions and all this sort of stuff that could come further into the picture, should something escalate, obviously the market will move higher on anticipation of any kind of bad news in that front. It's a weird thing, but markets, they of course are going to trade on the information that's in front of them. And so if there's concerns about whether or not a ceasefire is going to be effective or pass and kind of become a reality, if there's concerns about that, then usually the oil market and also notably in the commodities world, gold is up today as well. So you're seeing some of these concerns materialize in the price action that we're seeing today. And then you mentioned also, Johnny, good point there about OPEC, right? If they, of course, this is a modern day cartel to a degree that controls a lot of the supply of oil. And if they choose here in the upcoming March meeting that they're going to have, if they stay strong on their supply cuts in order to continue to keep the price of oil elevated, yeah, it paints an even further supply question picture for the price of oil. So we're seeing big moves, and in terms of a price action standpoint here today, this is breaking out of a multi-month range that we've been in, at least in the price of oil. So we are trading at fresh highs for, going back until November of last year. So seeing a bit of a breakout here in the commodities world.
Yeah, I was reading about the potential rise in crude further. Brent crude, it says here, could break out to $95 a barrel, so edging even closer to the $100 mark. It's somewhere around the $83 a barrel range at the moment. That would be quite painful, wouldn't it? When we're looking right across the world for a reduction in the cost of living, inflation staying lower, for longer, and maybe hitting that Bank of England target of 2%. A rise like that in Brent crude could scupper all those plans. We've got all the elections across the world in the next few months, particularly in the United States and the UK, and it's going to be the economy stupid that will affect a lot of voters, not all, because we do live in very strange times, and it's other geopolitical important matters that people are more concerned with these days. But the economy is obviously a big factor in this. But if we see Brent crude going above, let's say, $100 a barrel, it could change a lot, couldn't it?
Oh yeah, absolutely. And you mentioned, I mean, it's an interesting market to say the least, with everything, all the forces surrounding this commodity, right? Obviously, we all rely on oil. Our whole world is built around it, and so if the average consumer, as you mentioned, going into an election phase, if they're paying substantially more at the pumps because a spike in the oil price, it will hurt votes. And so, there's so many weird forces here. You have kind of the West versus the West's opponents, right, with the Middle East and Russia and that sort of thing. There's forces there if they want to try and disrupt an election. Who knows, right? We're not, we have no tangible proof of that, but there's also something else we can actually look at tangibly, and that's the reemergence of the Chinese economy. We've talked about that in the past as well. This is another force to throw into the mix on potentially rising oil prices, is that China, they're looking around, another political kind of opponent to the West, and if they see other kind of Western nations. Look at Japan. The Nikkei hit 40,000, which is, a fresh high for the last, months of rallies we've seen. The Nikkei's running high. You see the Indian stock market, you see the US stock market, the European stock market's doing quite well. And here's China. Their stock market's not doing nearly as well, however, has had a recent rebound. There's some stimulus that's been going on, some efforts from the Chinese government to try and bring back their economy. And if they are successful, well, the oil price is going to showcase for it as well, because of course they are a massive consumer of Brent crude oil. So there's a lot of forces here, Johnny, and it'll be interesting to see how this all plays out this year. I do have kind of my tinfoil hat on with the whole election stuff. If political opponents of the West want to disrupt elections, one of their strongest weapons would be higher oil prices to kind of throw a wrench into everything going on here.
Indeed. Let's look ahead to the week to come. Plenty going on over the next 7 days or so. We're going to hear from Jay Powell next week, I believe. What else takes your fancy?
Yes, so we do also have the big one, obviously, being the jobs numbers out of the United States on Friday. We get those 8:30 a.m. Eastern time. We also do see that we've got the ECB doing their press conference as well. It'll be interesting to see in terms of Fed monetary policy and ECB monetary policy. Are there going to be some convergences or divergences in the two? Are we going to see that kind of play out? Craig, he's not here with us here today, but him and I always discuss when it comes to the currency trading side of things. What we generally are looking for is divergences in central banks. If they're converging, it's a little harder to find meaningful trends. But if one central bank is looking to be more hawkish and the other is looking to be more dovish, it can create some serious trends between the currency pairs. So that will be certainly something to look out for, is crossing the narratives that we hear from Jerome Powell and the ECB next week. We also have JOLTS next week. We hear from the Bank of Canada as well, and we hear from Governor Ueda from the Bank of Japan as well. So quite a busy week next week.